It raises its status from being a risky commodity to a safe liquid asset. And we know in particular banks in Europe and in Canada, they're very concerned about liquidity, and they're very concerned about this word safety. Well, when I first went in the gold business, it was always treated, that's high risk. That's dangerous. That's speculative. All of a sudden now gold is being legitimized.
All right, welcome back inside our proactive newsroom. And joining me now is Frank Holmes. He is the CEO of US Global Investors. And Frank, it's great to see you again. How are you?
I'm great, great, and good news on the world of gold.
Yes, we're going to talk about what you're sitting on top of, which is a lot of gold there. But I want to ask you, I know that, Frank, back in 2021, you and I had talked about your prediction. In fact, I think you said it on CNBC as well, the fact that you felt gold was really going to go for a run. And that's what we've really seen.
We have, and I originally thought it'd be at 4,000 by now, but we're getting close. But when I was reevaluating some other sort of fundamental factors, I think that gold is going to be 6,000 by the end of Trump's presidency. So we're going to see many reasons, and something that we always put in our prospectus, Steve, is that we believe that government policies are a precursor to change. So we track and monitor both monetary and fiscal policies. And what's interesting is a binomial model. So there's really two factors for monetary: interest rates, money supply. Well, M2 is growing rapidly, and especially in China and India, we're pushing 10% growth in M2. That's usually a precursor for gold. And then on the fiscal is tax and spend and tariffs now, because can monitor and affect things. So this money printing by 40% of the world's population, that's China and India, has a significant impact on the interest in gold. But then there comes something, Basel III.
Yeah, let's talk about that, because this is happening July 1st, 2025. Maybe explain what that is and what it means.
Well, it means that finally that gold is being really legitimized as an important asset, and it's very significant. So that physical gold, not paper gold or unallocated futures contracts held by banks, is treated as tier one. It's treated what they call HQLA, as a high quality liquid asset, meaning that it can be counted at full market value alongside of cash and government bonds when calculating a bank's liquidity coverage ratio. When we go back from 2008 and 09 crisis, a lot had to do with banks, what their liquidity was and how much cash they had on their balance sheet, and gold was treated that they had to put it on margin, basically. They didn't get it treated equally. And now it's going to be treated equally as cash by JP Morgan, Royal Bank of Canada.
Yeah, Frank, I'm wondering, as the markets go up and down, as we've seen in the last so long, there's that volatility. People tend to look at things like gold, and now that you're suggesting that they're going to be weighted as equal, does that make it even a better play for those companies to try and get into gold?
Well, absolutely. And this really is important. It raises the status from being a risky commodity to a safe liquid asset. And we know in particular banks in Europe and in Canada, they're very concerned about liquidity, and they're very concerned about this word safety. Well, when I first went in the gold business, it was always treated, that's high risk. That's dangerous. That's speculative. All of a sudden now gold is being legitimized as cash or better than cash. And it reduces the historical regulatory penalty of holding gold and encourages greater institutional demand.
Yeah, it sounds like it's going to be an exciting road forward, and I don't want you to make any predictions about where the price of gold is going to go, but do you feel that it's still weighted as going up, up, up?
Yeah, I think there's no doubt it's going to have its DNA of volatility, which
Yeah.
really is 1% to 2% a day, up or down. But you want to be buying if it's down 2% a day, because odds favor with all these changes, and continue to see China buy gold. And why are they buying gold? Because they're trying to de-dollarize. They're anti the US and anti the US dollar, but their currency is not fungible. So the only way they can create any trust in their currency is to buy more gold and have it backed by gold. But I think also this idea, I learned this about gold ETFs in Germany. We saw when gold was around 1500, Germany wanted its gold back to Germany out of Fed banks and money center banks in New York. So that gold went back, and they started treating the gold ETF that it was a taxable event. It was better to own bullion. It was better. Now, all of a sudden, the banks are in that position that it's better, and we're seeing central banks buying. Now we're probably going to see the banks in Canada encouraging people to buy gold. Banks in the US encouraging to buy gold because it's not going to be deemed as a high risk asset on their balance sheet. So Basel III emphasizes physical allocated gold outside of the banking system. So this is really profound and significant. As I said earlier, it legitimizes gold's role as a financial safe haven.
Mm-hmm. Fascinating stuff as always, Frank. Thanks so much. Great to catch up with you.
Thank you, my friend. Happy
All right,
gold
Frank.
investing.
There's Frank Holmes, the CEO of US Global Investors.